Hey guys, welcome to Little Panda Forex. Today's video is about how to find the perfect order block on the 5 minute. What is an order block? An order block is a very specific candle in the market that looks something like this. What we expect price to do is have some sort of movement, come to this order block and then go up. That is the expectation from smart money traders, okay? But order block on its own, it is the most pointless thing ever, because order block on its own, it is simply a POI. What does POI stand for? Point of interest. So these two things that is very important for an order block to be considered a good order block is: one, we need to have liquidity being generated and potentially taken, and two, we need to have a clean break of structure so we can see where the market is going. Here, let's identify the order block. So for me, the order block is this red one because it is a different color. We are looking for buys, okay? The reason we're looking for buys is because look at this push to the upside. It broke all of these structures. You can just tell that this is a very strong move. It has a lot of momentum. So let's annotate it. So here we have the break of structure. Here's our order block, the one just over here. Okay, this is our order block. So what we expect in price is to come down and react, okay? But we got the first thing, we got this one, we need the second thing, which is very important, which moves the market: liquidity. So right now we do nothing. All of this, it is pointless to us. Now we have something very interesting. What do you have? We have relative lows, which is a form of liquidity that the market has generated. It is giving us hints. Just over here is relative lows. So now we have the break of structure and the liquidity area and the order block. Now this is a good order block, therefore it is likely to have some sort of reaction. So you would put your buy limit here. You would target, either you can target this area or you can target the most high here, which is there, okay? And this is the 5 minute time frame, by the way, guys. And you can expect the price to never go below this order block. So mark your area from the top to the bottom, and that's it. And let's see what happens. Okay, we're triggered. And you made your 7.4 up. As simple as that. Why? Because we had a very clean break structure. As you can see, price was not corrective. It wasn't like slowing down, you know, going up. It was very okay. And we had liquidity here, order block here. Happy days. Is this a good break of structure? Yep. Just around here we broke the structure. Where's our order block? This red candle here. Now we want price to come down to our area and give us some sort of hint. So where is our hint that we have liquidity? Over here. Again, relative lows. And the move to the upside, was it strong? Yes, it was. And we had the break of structure here. Now we have the order blocks here. You just put a buy limit. Price should respect the order block, therefore it shouldn't go that much down below. Again, where would you target? Since we don't have anything more recent, we just go with this. You would get about 5.4R on this trade, and we would play it. Let's see. Yep. So the trade went our way, but it missed us by it just missed us. You wouldn't get triggered because this is gold 5 minutes, so because of the spreads and everything, it would have missed you. But it was the perfect thing. It made perfect sense. Okay, now let's look at a possible sell. Again, let's annotate it. So we have a break of structure here. You can also say we had a break of structure here. Why are we not considering this as a level where a structure needs to break? Because this move only came to here, whereas the move from here went here. This is the most recent high. So here's the main structure that was broken, but we are going for this to be safe. So we can see the movement down is very strong, so it's going a lot of bearish pressure. And where's the candle? Here is the order block candle. As you can see, because we are selling, we are looking for a bullish order block, which is blue in my case. So you just mark it, and right now we have the break of structure. We got the order block, but even then it is not ready. It is simply a POI. We need to wait for market to possibly create some sort of liquidity. Okay, so now we have liquidity generated. If I zoom in, let me remove this. We have this relative high, which is a liquidity zone. Now let's mark our order block again. and even at this point our order block has not been mitigated, which means it's still valid. And add your sell limit. Now where would you target? You can either target here, or you can target possibly much lower. Let's see, possibly here is a very good area. Let me just see. Yeah, there's something sitting here, some sort of reaction will happen there, so I will go like this. Okay, in this case you would get only 2.8 because our stop loss is fairly big. Obviously if you go to a smaller time frame you can have a better entry, but since we're talking about 5 minutes, let's keep it on 5 minutes. Okay, we triggered, didn't hit our stop loss, and yeah, full target achieved. Did this go further down? Let's see. Yeah, we had a sell around here and this thing just went, oh my god, it went more than 10 hours. Okay, anyway, and this is how you find order blocks fairly quickly on the 5 minute time frame. Yeah. Step 1, we need to wait for a break below or above the 50 SMA. Step 2, we must have a retest of the recent break. Step 3, we need an engulfing candle, whether it's bullish or bearish, to confirm the move to the upside or to the downside. Step 4, we need to use a 1 to 3 risk to reward ratio. This is very important, guys. What this means, you risk, let's say 1%, and you want to make 3%. It's very important if you want to have a profitable trading journey overall. Step 5, stop loss pip amount is irrelevant. Sometimes I hear people saying, oh, the stop loss is 60 pips or 100 pips. It doesn't really matter as long as your take profit is 3 times your stop loss. Step number 6, only have one position open at any given time. This is very important, guys. As you're learning to trade, it's very important that you keep one position open. If that position hits your stop loss or take profit, then you can open another one. We have a management rule that we need to follow while we're doing this technique, and it basically is, if you have one winning trade within a week, do not open any more trade until next week. Or number 2, if you have one losing trade, then you can open one more trade within that week. And if both trades hit your stop loss, do not enter any other trades. So that's the rules. And now let's go to the charts. Okay, so we end the 4 hours time frame on GBP USD. Let's go to indicators. Be on public library and you're going to search for SMA. Stands for smooth moving average. Add it to your chart. Go to the settings. It can be any color you want. The thickness, I'm going to put it to the highest level. And the length, this is important, it has to be 50. So what we have here, let's say for instance here, so we had this down movement and then price came here, it broke above the 50 SMA, and what we're looking for, it's for a retest with a bullish engulfing candle. Let me remove that. So we had a break above the 50 SMA and we're waiting for a retest. So price came here, this is the retest, and also if you use this little tool here, where is it, horizontal line, and let's see here, if you put it here, this is a key level because price came here, touch, went up, came here, touch again, drop. So we broke above and now we at this level. This was just something additional. We need a engulfing candle. In this case, because we're interested in a buy, we're looking for a bullish engulfing. So price break, it came down here. Here we have a red candle followed by a bullish engulfing right over here. Let me just point it out for you. Right over here. So this is a bullish engulfing, as you can see, because the body is engulfing the bear candle. That's essentially what it means. So this would be my area to enter a long position after this 4 hour closes. The stop loss has to be below these wicks. So remember when I said we don't really care about the stop amount, how much the stop loss is. It has to be a 1 to 3 risk to reward ratio. So we need to make sure this trade is 1 to 3 over here. So yeah, let me just use the replay function. So let's assume this was the market, this was the live market. Price came down, you had this bear candle, and this was followed by a bullish engulfing. So this is where you would enter, and then what happens? Price comes again down, goes up. There you go. This candle over here, hit your take profit. So this was a 1 to 3 risk to reward ratio. So if you risk $100, you've made $300 in a matter of, you started here 3rd of July and you hit your take profit 7. So in a matter of 3-4 days, you hit your take profit. And it's as simple as that.